All right, and welcome to our guide to Gusto Payroll integration with My Solo 401k Financial. We want to give you some step-by-step instructions of how to integrate your Solo 401k with My Solo 401k Financial with Gusto's payroll if you happen to be running your payroll for your self-employed business through Gusto. So the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. First, we want to highlight some of our good resources. You can join us every day at mysolo401k.net/my community. We host a daily Zoom. We have forums where you can post questions 24/7. We have a deep dive library of videos and webinars. So there's lots of great ways to learn and to share the knowledge. It's always free to join. All are welcome. Our daily Zoom runs at 1 p.m. Pacific, 4 p.m. Eastern. So just to first set the stage with some of the basic concepts in terms of Solo 401k eligibility. A Solo 401k is for an owner-only business with no full-time W-2 employees. So think like an independent contractor, maybe self-employed professional, like an attorney, realtor, CPA. The key is that you're reporting earned self-employment income on your taxes, for example, on Schedule C, if your business is taxed as a sole prop, or W-2, right? If your business is taxed as an S-Corp, or an LLC taxed as an S-Corp, or maybe a C-Corp, right? So, which means you may be on Gusto. And so your spouse can also participate in the plan as long as your spouse, for example, is also receiving their own W-2. So the key is that it's an owner-only business. In other words, there's no non-owner, non-spouse, full-time W-2 employees working for any business owned by you or a spouse, if any. Some of the top eligibility considerations are, do I need a separate entity? No, you don't. Ultimately, you just need to report earned self-employment income on your taxes. There's no minimum amount of earned self-employment income that you need to report in order to be eligible to set up a plan. Again, your spouse or business partner can participate as long as they are reporting their own earned self-employment income, like they're getting their own W-2. You can have a solo 401k even if you have a day job, even if you participate in your W-2 employer-sponsored plan, as long as, again, you have that separate earned self-employment income. As far as the setup process, of course, you start out by going to mysolo401k.net, click on open account, then solo 401k. It's a quick 1-minute application. So once that application is submitted along with the payment, so we charge 100% flat fee. It's $650, which includes the $525 establishment fee, plus the first $125 annual fee. Starting 12 months later, we charge a $125 annual fee that covers the second year. But of course, our plan is also eligible for $1,500 in solo 401k tax credits, which is going to more than cover the cost to set up and maintain the plan for the first 7 years. So once you submit that payment and the application, we prepare the documents to create the plan same business day. So you'll get an email with a link to our secure portal where you can access those documents that you simply download, sign, upload back to the same email. There's going to be an upload link. And then a third link in that email where you tell us, we take it to a page on our website where you tell us, okay, where do you want to have the account at? Because we're totally neutral as far as where the accounts are set up. We help our clients open up accounts at hundreds of different banks, many different brokerages like Fidelity, Schwab, being some of the top 2 brokerage account places. So you download, you upload, you tell us where you want to have the accounts. We prepare the paperwork to open up the accounts at the bank or brokerage of choice, maybe multiple sub-accounts. For example, if you want to make both pre-tax and Roth, right, you'll have an opportunity to tell us that when you're telling us where you want to have the account. Then we prepare the paperwork to open up the requisite number of accounts. Similar process where you go back onto the secure portal, you'll be able to access the pre-filled documents. You just simply, for example, if it's Fidelity or Schwab, you just download, sign, upload, goes back to our team. Then we review and compile that paperwork so it can be submitted to the brokerage like Fidelity or Schwab. You'll get an email from the brokerage once the account is open or the accounts are open. And then you can start funding it, right? Making contributions, rolling over funds from, say, a former employer plan or a non-Roth IRA, which, of course, we are guiding our clients every day through that rollover process, right? Whether it's filling out transfer paperwork, et cetera, et cetera. So that's the process in a nutshell to open. Let's go to we kind of touched on those concepts. Just real quick, we'll touch on some of the top use cases. So number 1 would be the frugal investor. So as mentioned, our plan is going to make the individual that sets up the plan, the self-employed business itself sets up the plan, eligible to claim $1,500 in solo 401k tax credits, which is going to more than offset the cost to set up and maintain the plan for the first 7 years. Our plan is going to allow the individual to maximize Roth contributions. It could be mega backdoor Roth, employer Roth, in-plan Roth rollovers. So in terms of contributions for 2024, with our plan, the individual is going to be able to contribute up to $69,000 or even $76,500 if they're 50 or older. The large account holder also loves our plan because once the value exceeds $250,000, there's a Form 5500EZ filing requirement. And we handle that Form 5500EZ preparation and filing through the electronic filing system as an optional free service. In other words, no additional charge. The alternative investor or also gravitate to our plan because our plan does allow to not only invest in traditional type investments like stocks, bonds, mutual funds, but also true alternative investments such as real estate, private placement, private stock, crypto, precious metals, notes, the rainy day investor. So with our plan, the solo 401k owner is going to be able to take a solo 401k participant loan. So this would allow the individual to literally withdraw money from their account and use it for any purpose whatsoever. So that withdrawal is not going to be considered a taxable distribution as long as it's properly documented as a loan and paid back according to the loan solo 401k loan document requirements. So we handled those loan document preparation as part of our service for no additional charge. As far as the terms of the loan, those repayment terms, the individual is going to be limited to borrowing up to 50% of the balance, not to exceed $50,000. They have to pay it back in either monthly or quarterly payments, equal payments of principal and interest. The interest is either going to be prime plus 1% or a CD rate plus 2% with those payments spread over a 5-year term. Okay, great. Now I want to go to the guide on our website, and we'll include a link here. Let me grab that link real quick and put it into the chat. So here we go. And let's see, let's make sure we're sharing our screen properly. 1 second. Okay, here's the guide. So it's important to understand some basic concepts. So number one, this is for solo entrepreneurs, right, who are using Gusto as a payroll service. So typically that's going to be somebody whose business is taxed as an S-Corp, or it could be an LLC taxed as an S-Corp, or a C-Corp, right, or even an LLC taxed as a C-Corp, or if they're otherwise reporting their self-employment income on a W-2 via Gusto. So the role of Gusto is going to, the key concept from a solo 401k perspective is giving Gusto the information that's needed so they can report what's needed to be reported in terms of 401k contributions on the W-2. So information that needs to be reported is a key objective here. So that, therefore, we need to understand, okay, well, what information needs to be reported on the W-2 and what information doesn't need to be reported. So what needs to be reported are pre-tax and Roth employee contributions. Employer contributions are not reported on the W-2, right? Let's take an S-Corp, for example. Those employer contributions are going to be reported on the S corporation's tax return. It's not reported on the W-2. Voluntary after-tax contributions, they are a type of employee contribution, but they do not need to be reported. The contribution itself does not need to be reported. If you look at the W-2 instructions from the IRS, it's clear that reporting those voluntary after-tax contributions is not required to be reported on the W-2. Flexible contribution payments. So another key concept from a solo 401k perspective is that the contributions do not need to be deposited from a specific business or personal account, regardless of the type, right? From a solo 401k perspective, what's most important is that the contributions are within the limits, by the deadline, reported correctly. So it's acceptable from a solo 401k perspective to deposit all types of contributions, whether employee, employer, and or voluntary after tax, either from a personal account or a business account. Payroll tax obligations. This is another concept that will come up a lot. So when you make a contribution to the solo 401k, whether or not it's a pre-tax or a Roth contribution, whether it's an employee or an employer, et cetera, is not going to reduce your obligation to pay payroll taxes, such as Social Security and Medicare. One just needs to look at a W-2 to really understand that. So if you look at a W-2, you'll see box 1 of the W-2, which is the income that's taken from the W-2 to your 1040 to report as your taxable income. And then you got other boxes on there, right? Like your Social Security wages, your Medicare wages. So for example, if somebody has $50,000 of W-2 wages and they contribute $10,000 as a pre-tax employee contribution, right? That's going to reduce their taxable income. That'll reduce box 1 by $10,000. Instead, it'll be reported over in box 12. So now they'll only have $40,000 in box 1 that they then carry over to their 1040. But if you look at those Social Security and Medicare wages boxes, those are not reduced, even though the individual has made that employee contribution. So I think those are important foundational concepts. Once we understand that, then we could go through the guide. So, and this is, we've got some screenshots here. This is taken directly from Gusto's guidance. So step 1 is pretty self-explanatory, but step 1, right? You sign in, of course, to your Gusto admin account. You click on benefits. You can see from the screenshot there. Then under the financial health, you're going to want to click where it says traditional or Roth 401k. And so if you're making both pre-tax and Roth employee contributions, you need to go through this process twice, right? Once to report the pre-tax contributions and then a second to report the Roth. Then you're going to go ahead and click, yes, we currently offer this benefit, then next. Then you're going to click continue to manage your 401k manually instead. This is going to allow you to enter the information. You need to fill out this benefit name field. I recommend completing it with either pre-tax solo 401k or Roth solo 401k as applicable. Then you're going to choose the benefit type, which is 401k from the drop down. Then you're going to either select the percentage of the gross pay or the amount, and then fill in the amount as applicable. Then you're going to choose whether it's either the standard limit or the catch-up limit. So this would apply, for example, if somebody is 50 or older. For example, for 2024, they're able to contribute an additional $7,500 as a catch-up contribution. Then there's a section, if you're in the pre-tax 401k part, there's a section where it's asking about company contributions. And as we just discussed, employer contributions do not need to be reported on the W-2 and therefore do not need to be reported to Gusto. So therefore, simply select do not contribute. Then you're going to click save and continue. Now, what is going to happen is that Gusto is not going to, when you are set up with Gusto, you connect, of course, your business account, and then you got your personal account for your direct deposit. So taking a simple example, if you have $1,000 of wages and you want to contribute $100 to your solo 401k, Gusto is not going to withdraw $1,000 from the business account. Instead, they're only going to withdraw $900 and then transfer that to the employee direct deposit personal account, leaving the other $100 in that business account. So that other $100 is then going to need to be transferred over to the applicable solo 401k account, right? For example, the pre-tax account if it's a pre-tax employee contribution, or the Roth account if it's a Roth employee contribution. And we've got links here on the guide with more detail about how to transfer, for example, to a Fidelity or a Schwab, etc. All right, great. Well, hopefully that is helpful. Appreciate all the good participation. As noted, please continue to participate in our community. We go live every day on our community, mysolo401k.net/my community. It's always free to join. All are welcome. We also have forums where you can participate 24/7. So it's a great way to learn, to share the knowledge.